We are living through the most dangerous times in human history. That is the latest warning from Gerald Celente, one of the most well-known trend forecasters alive, in his latest update to investors. Celente is the founder of the Trends Research Institute and publisher of the Trends Journal. He's been forecasting geopolitical and economic trends for 46 years. He called the 1987 crash, the collapse of the Soviet Union, the dot-com bust before it happened, the 2008 financial crisis, and warned of rising anti-Americanism before the September 11th attacks. In this interview, he warns that oil is heading to $130 a barrel, that a dot-com bust 2.0 is underway, that the war with Iran will not end, and that the risk of nuclear escalation is higher than at any point in his lifetime. He also introduces a term most people have not heard yet: dragflation, declining economic growth combined with rising inflation. Not a slowdown, a systemic unraveling. Here is exactly what he said.
I've never been more concerned. Again, I grew up during the Vietnam War. I'm the same age as Trump. This is serious. This is deadly, deadly, deadly serious, like we've never seen before. You go back to your Trends Journal for years, months, and weeks. We've been warning that if the United States and/or Israel go to war against Iran, number one, you're going to see oil prices spike to above $100 a barrel to probably settle around $130 a barrel. It will bring down the global economy and the equity markets, and the war will not end quickly. You couldn't beat the Iraqis. You couldn't beat the Vietnamese. You couldn't beat the Taliban. What makes you think you're going to beat the Iranians, who are very advanced, as we've been writing for decades, militarily, technologically, and scientifically? You're not going to beat them. There are 91 million of them versus, 7 million in Israel? You don't have to be good to figure this out. We're concerned about going nuclear. Israel says that if they're losing, they have what they call the Samson option, S-A-M-S-O-N, that they go nuclear. They have between 200 to 400 nuclear warheads. They say that some 90,000 homes, apartments, and buildings have been destroyed in Iran. Iran is demanding that the United States and Israel pay for this damages. It's not going to do it. They're also demanding that Israel has to stop their invasion into Lebanon. So Iran is demanding that they stop the Lebanese war. They cut the sanctions off Iran. They refuse to attack again, and they pay for the damages. We don't think they're going to agree to that, and we don't think Israel's going to agree to it.
So there is Gerald Celente laying out exactly why he believes this war will not end, and the data right now is backing him up. Let that sink in. Celente is saying this war has no off-ramp. Iran is demanding full reparations for 90,000 destroyed buildings. They want the Lebanon invasion to stop. They want all sanctions lifted. And they want a guarantee of no future attacks. The US and Israel are not going to agree to any of that. And Iran is not going to back down. That is a deadlock. And a deadlock in a hot war means escalation, not resolution. Now, look at where the numbers are right now. Brent crude has spiked above $112 a barrel. The dated Brent price, which is the real-world benchmark for actual oil deliveries happening right now, just hit $144 a barrel. That is the highest level ever recorded since S&P Global began tracking it in 1987. His $130 call is already looking conservative. Gas prices have crossed $4.16 nationally, the highest since 2022. In California, it is approaching $6. In parts of Los Angeles, stations are posting $7 a gallon. Diesel, which moves everything in the industrial economy, is forecast by the EIA to peak above $5.80 this month. Middle Eastern producers have been forced to shut in up to 9 million barrels per day because the Strait of Hormuz is effectively closed. The IEA has warned that this crisis could be more severe than the oil shocks of the 1970s. The equity markets are confirming the damage. The S&P 500 is down 4% on the year. The Dow, the S&P, and the Nasdaq have all broken below their 200-day moving averages. All three major indices are in correction territory. Ceasefire rallies have given back gains within hours. And the recession call is getting louder by the week. Moody's Analytics now puts the probability of a US recession in the next 12 months at nearly 49%. Goldman Sachs has it at 30%. The US economy grew at just 0.7% in the fourth quarter of 2025. February payrolls contracted by 92,000 jobs. Mark Zandi, chief economist at Moody's, said it plainly, nothing else can go wrong. We are on the edge, on gold and silver, exactly what Celente is calling for. Gold is above $4,650 an ounce, up over $1,600 from a year ago. Silver is above $75, up more than 140% year on year. He says the death of the dollar is before our eyes. The metals market is starting to price that in. Now, he goes deeper. He draws a historical parallel that connects everything, and he explains why the equity collapse was already underway before the first bomb dropped.
A false flag event, like a 9/11, people forget. I say when all else fails, they take you to war. The market, you go back to your Trends Journal the day of Trump's State of the Union address this year. That was on a Tuesday. The next day, the Wednesday, I did a podcast with Judge Napolitano. I said the United States is going to attack this weekend. They're going to attack Iran. When all else fails, they take you to war. Google up Franklin Roosevelt seizes Japanese assets. Anybody just Google it up. The Great Depression's going on. But on July 26, 1941, President Franklin Roosevelt seizes all Japanese assets in the United States. You know why? Those dirty Japanese invaded French Indochina. Wait a minute. Number one, what do I care? I'm an American. The three nations, the United States, the UK, and the Dutch, cut off 3/4 of Japanese foreign trade. They stole their money and cut off 88% of their imported oil. They only import 98%. Okay, so they stole your money. You cut off their trade. They got no oil. I can't figure out why they bombed Pearl Harbor a couple of months later. We had forecast this thing is going down. We have a dot-com bust 2.0. They were pulling out of the private equity groups. They couldn't give them back all their money. All the equities are going down. Again, before Trump gave his speech, we said this thing's going to go down, and they're going to do everything they can to get the people's minds off it. We're very bullish on gold and silver. It's just beginning. Again, the death of the dollar is before our eyes. No, we see a dot-com bust. Way overinvested in these dot-com companies. And as we say, the business of America is war, and the business of China is business. China is investing very heavily in AI. China is going to take the world lead in AI. India number 2, way over-invested in these American companies. People want their money back, and they can't give it to them. And you only get 5% back. Oh, you made 11%. I want it back. You can't get it back. This is serious. Again, it was going down before this war happened.
So there is Celente connecting the dots between the war, the equity collapse, the death of the dollar, and why he believes all of this was already in motion before the first bomb dropped. Let's break down what he just laid out, because there are several warnings stacked on top of each other and they all connect. First, the dot-com bust 2.0 call. This is not just Celente's opinion anymore. The S&P 500 Shiller Cape ratio is sitting near 40, the second highest it has ever been, just behind the peak in late 1999, right before the original dot-com crash. The Buffett indicator, which measures total US market capitalization against GDP, is at 213%. That is the highest on record. Private equity funds cannot return investor capital, and the war has become the perfect cover story. Nobody is asking about the equity collapse anymore because the entire news cycle has shifted to missiles and oil tankers. Second, the commercial real estate collapse. In January 2026, the delinquency rate on office loans packaged into commercial mortgage-backed securities hit 12.34%. That is the highest level since they started tracking it in the year 2000. It is worse than the 2008 financial crisis. $930 billion in commercial real estate debt is maturing this year. Office vacancy nationally sits between 17 and 18%. In cities like Denver, it is above 36%. A 50-story tower in Manhattan's financial district defaulted in January because the balloon payment could not be made. The regional banks that loaded up on these loans during the low-rate era are now directly in the firing line. Third, the consumer. CNBC just ran a piece interviewing Americans at gas stations across the country. People in Los Angeles paying $7 a gallon. A contractor who moved from Virginia calling the prices insane. A retired woman in Nashville saying she would move out of town if she had to pay for her own fuel. 86% of Americans now say gas prices are their top financial concern. Moody's Analytics confirmed that the wealthiest 10% of consumers drive nearly half of all spending. The bottom half of the economy, according to Deloitte, is effectively already in recession. And then the defense spending. Celente keeps hammering this point, and it is one of the most important. In February 2025, the administration proposed cutting the defense budget by $500 billion. 12 months later, they increased it by $500 billion. That is a $1 trillion swing funded entirely by debt, on top of a national debt that has already crossed $39 trillion. Goldman Sachs is warning that the Fed cannot cut rates because inflation is being driven higher by the oil shock. The Fed is trapped, the government is spending more than ever, and the consumer is already broken. This is what Celente sees closing in, and here is where he puts it all together.
Let's go back to last February. Not this one, 25. The president. I'm going to lower that defense budget by $500 billion, all right? Oh, what did he do this February? Hey, I'm going to increase it by another $500 billion. Wait a minute, you just said you're going to cut it by... I'm saying the debt load is huge. I'm concerned. I believe we're going to go into dragflation, not stagflation. But declining economic growth and rising inflation. This thing could escalate into a real escalating war if they go nuclear. I'm very concerned about that.
That's this. I mean,
I'm just saying. Again, the Samson
well,
option. I'm not making that up.
yeah, no, well,
And
yeah.
by the way, totally out of the news is the Ukraine war.
Hmm.
Totally out of the news. Totally. So is a false flag event going to ignite that? Oh, they bombed a nuclear power plant. You don't know what's going to happen. And I'm saying these are the most dangerous times ahead if we don't have peace.
So there it is, Celente's full warning laid out in plain language, and the word he wants you to remember is dragflation. That is the word Celente is using. Not stagflation, where growth stalls and prices stay flat. Dragflation, where the economy is actively declining while inflation keeps rising. And that is exactly what the data is showing right now. Growth near zero. Oil above $110. Gas above $4 and climbing. Diesel approaching $6. And the Fed unable to cut rates because inflation is being driven by a supply shock they cannot control. And then the part that should concern everyone watching, the Ukraine war has completely disappeared from the news cycle. An active nuclear-armed conflict forgotten. And Celente is warning that a false flag event, whether in Ukraine or on American soil, could be used to escalate everything further. Gold above $4,650, silver above $75, oil at record physical delivery prices, equity markets in correction, commercial real estate defaults at all-time highs, recession odds approaching a coin flip, a $1 trillion swing in defense spending, and 2 active wars with no end in sight. The question is not whether this is serious. The question is whether you are prepared. Stay informed, stay sharp, and make sure you are subscribed because we are tracking every development as this unfolds.